Hey, welcome. Let's see what we got for what we had yesterday. I want to explain what happened here. Entry here, stop loss here, anticipated TP here. What really occurred yesterday? Now let's look at it. I took an L here. So what did I misread? What actually went wrong? After the loss, I tried to see if I could optimize or make out something out of the trade, which eventually happened. But what can I do to prevent something like this from reoccurring? You understand? Everyone knows that you cannot have 100% win rate. But we all strive to refine and make our strategy better. Okay. Now, like I said, just hold your questions after the explanations and everything. I will attend to each of them. Let's flow without going against the current. Okay, so what I was trying to say is this. Let's look at it this way. Okay, I misread this situation looking for sales to this low because we were in seller's territory. But what I misread was the momentum. Look at the buyers here, which is the retracement phase. Look at the sellers, which is supposed to be the trend continuation phase. Now, on the other hand, look at how this last seller was rejected. Okay, then look at how these bullish candles came up back inside this range. Now, so that I don't make things complex, let me remove this. You see how this candle opened without a bottom wick. Now, what I was looking at was I wanted to is like entice the market. I wanted to entice the market because I know whenever price opens without a bottom wick, there's a high probability that it wants to give us that bottom wick before turning going bullish. So what I was looking at was when price comes to give us this bottom wick, it should tap this my TP, then we turn bullish. That was just one of the things I was anticipating, but it did not work out that way. All of this would have occurred before London Open, or London Open would have pushed price down. Now look at another enticement that made me to feel like it was going to play out the way I wanted. Look at the other enticement here. You see how this 2 o'clock candle closed below this range. This is an indication that the next candle was supposed to continue dropping, which is the London Open, but it did not occur that way. Now, looking at it from an advanced level, the London guys always like to buy price when it's at a fair value. Okay, always like to buy things at a fair value, meaning if they want to take buys, they want price to make a low. If they want to take sales, they want price to make a high. All those kind of scenarios, if you've not noticed it, okay, now you're hearing it. So you put it into perspective. Now, what is the perspective I'm talking about? This is it. Um, this made a low before eventually doing what? Turning bullish. However, looking at it technically, this 2 o'clock candle broke and closed below this range. So I was expecting this candle to continue down because you assume that all of this retracement is the high that was made for it to now continue dipping. But that did not work out. Again, in hindsight, you see all the points I'm mentioning that would I'm putting on the back of my head. I say, okay, on the back of my mind, okay, this is what. Now, let me give you an overall perspective of what went wrong. One, putting all price action in, putting the story together. One is see how price dipped here. Beautiful. That's to tell you that this was an impulsive move. See the retracement, equally impulsive. However, the sellers were strong because whenever price went up, it got smacked down. It tried again, got smacked down. You see these top wicks showing you that sellers were interested in pushing price down. But you see this one, the top wick, as it kept printing bullish candles, the top wicks kept getting shorter, kept getting shorter, meaning that the buyers were getting more interested in this, in taking price up. But don't forget that we're in sellers territory. The only way buys can come in is after we had broken this high. And what happened? Sellers came, but look at how the sellers came. Very weak continuation phase. This is supposed to be a continuation phase that should be impulsive, but it was weak. Now let's gauge the leg. Let's gauge the leg. Let's look at how price came down versus how price went. This is strong. So the bearish leg or the sellers movement was stronger than the buyers movement. Now let's gauge momentum of how price retraced and how it eventually came down. You see that the sellers was weaker than the buyers. Now let's look at how price came back again. You see that the buyers appeared more interested in taking price upwards. Then putting it in perspective, look at this bottom wick, telling you that price was smacked up away from that area. Now, putting it again in perspective, the whole story together, instead of taking it microscopically, let's go from micro to macro, from the smaller, which is known, to the bigger. Now, the bigger perspective is that all this zone we're inside is what? Demand zone. And like I mentioned earlier, we were stuck in a demand zone. Now I tried to do something to see where institutionally price would kick off from. I used a trend line because trend line helps to know institutional levels. Okay, it helps to know. It's not like it's how would I put it? It's not like it's a fail safe, but it gives you an ideal situation. Like I said, ideal, and we are dealing with real market price. So ideal, just like if you're a science student, you know that the world we operate is a real life situation, not an ideal situation. If it were an ideal situation, everyone would be rich, no one would be poor. If it were an ideal situation, everyone would be very healthy, no one would be sick. But the real situation cuts across every spectrum, meaning there must be some persons who are super rich and some persons who are super poor. There are some persons who will be super healthy and some persons who are super sick. So that kind of spectrum. But in the middle is where the balance is. That is where you're supposed to say, okay, that is a balance. Everyone, you have those who are not very sick but not very well, but just a balance. What I'm trying to say is that this trend line gave me an indication. First touch, second touch on the weak ear, third touch respected, fourth touch right to the teeth, right to the teeth. Okay, before price did what? Spiked up. Then again, something I noticed yesterday was, let me, something I noticed yesterday was the start of the daily candle. The start of the daily candles. When I came to the daily, I discovered that this low had already been broken and price was already around here, giving me a bullish vibe. Okay, so whenever I'm looking to take sales, I don't really like the low on the daily to break the previous candle's low if I'm looking to take sales. Okay, I would like it to let it do its high or let it make low, get its high, but let it not break this low yet. You understand? But it had already broken the low, giving us this dip and had retraced before pre-London, like pre-London, let me not say before pre-London, before London opened. So I'm not like, okay, this is another vibe. So many indicators were there, so many indicators. However, I was just bent on trading the price action. because there was no fundamental news, unless I will have to check again. There was no fundamental news that would affect price to react the way it did yesterday. With that being said, you see how many things I put into perspective in order to find out if this situation occurs again, what will I do to prevent myself from being on the wrong side of history? Okay, what would I do is the question. In other words, what would you do? WWYD. Okay, without much ado, that was a loss. So for the opposite side, I was looking at taking buys on the opposite side to say, okay, since that sell did not work out, let's look at what we'll do for the buys. For the buys, break of this high will indicate, because this is the last seller's territory. This is the high of the last seller. It's just like when you make higher low and lower low and lower high, just like this. So this is the last seller zone, which is supposed to act like supply zone. If we bullishly breach it, price should go up, because I know on the daily we're in buyer's territory, and all of this is what retracement on the daily time frame. So that was what gave me an indication to do what, enter these buys. Meanwhile, there's a strategy, like I told you, I'm building or trying to re-engineer a strategy that would allow me to understand that if this happens, then it's an indication that that want to happen. Okay, so but I'm not going to just spill the beans yet until I've compiled it. At the moment, it's still in the reverse engineering stage. I'm breaking down what I've already done before, and I'm trying to couple it, remove those knots that I've worn, and try to see how I can make corrections to the areas that require corrections. Okay, don't forget to subscribe, hit that notification button down here. It's in the shape of a bell. Comment and like. Without much ado, let's look at what I'm looking at for today. For today, this is what I'm looking at. Um, for today, I'm looking at taking buys on the break of this high, stop loss here. That is scenario one for price to go up. So this will be my scenario one. On the other hand, there is an advanced technique that I learned from my mentor, which implies that this will be set one, and I'll be looking forward to seeing price deeper than this low to give me what, set 2, okay, before coming up to retest this high or here. Okay, this will be my scenario 1b, this will be my scenario 1a. 1a is for price to just continue moving bullish, break this high, and activate my pending order, fill my pending order, or make a deeper retracement before going up. I don't know how deep this retracement will be, but it should be lower than this my set 1. It should be lower than this support. Give me a deeper retracement before going up. It can be body candle closing below, or just wick piercing this low, then turn bullish. On the other hand, we could get price to make this, which I'll be looking to take sales if this occurs. This will be my scenario 2. Okay, so this is what I'm looking at. This is what I'm looking at. So in looking at it from a schematic diagram, this is what it looks like. To go for buys or to take sales. So this is a schematic diagram of what I'm looking at. This is just on GJ, British Pound, Japanese Yen. Don't forget, very important, to subscribe, comment, like, and hit that notification button. Okay, without much ado, let's look at what we got next on our plate. The next thing on my plate is gold. Like I said, um, Gold was slow yesterday. Nothing much occurred yesterday. So if this breaks this bullish candle that is flickering its way upwards, breaks this high, I'll be looking to take buys. This is clean traffic going up. Okay, clean traffic going up, or we look for sales coming down. This is just what I'm looking at on gold. Very simple, straightforward. The last but not the least is Bitcoin. Again, we're just going to go straight to the point. We won't- For gold, in fact, let me talk one or two things about gold. We are sitting on demand level on gold, this gray zone. Meanwhile, this gray zone here is supply level, which implies that we're in a money spot. Okay, we're in a demand level on gold, however, also on a supply level. Demand level on the daily. So daily we are looking for buys. 4 hours, 4 hour time frame we are looking for sales. So the only way the buys on the daily would work out is when we take out these sales on the 4 hour and on the 1 hour. We have breached the 1 hour sales, which is this supply zone here. As you can see, price was stalking, doing all the loitering around here. Immediately broke this high, it started pushing impulsively. Now this is the gray zone here. Immediately breaks out of this gray zone, I'm anticipating it to do what? Continue bullish. Okay, this would be my scenario one. Or it breaks this low, I'm anticipating it to go bearish. This would be my scenario two. Now looking at it like this, that means that the buys for scenario one will play out if it breaks this high. The sales, which is the new money from the 4 hours, will play out if it breaks, in fact, from this low here to keep coming down if it breaks this support. So, but if you don't get it, watch it again. And don't forget to watch the ones from Monday to have a clear understanding of why price didn't play out here yesterday. Okay, the last but not the least is Bitcoin. Bitcoin is just like gold. Okay, it's in daily buyer's territory. On the daily, we are in buyer's territory. On the 4 hours, we are in seller's territory. Okay, so but you see this, it's not exactly like gold because of these resistance levels here. So these levels could act like areas of encumbrance to stop price from going up. So one of two things could occur. Price could just breach impulsively out of it, or would be going like this to the top, just like as you see. Look at this. All this slow movement is because of it came slowly. So let's see if on the break of this high, let's see if there's going to be an impulsive move going up, which we are currently breaking the high. So we'll wait for the candle to close to see if we're going to get an impulsive move going up. For the buys, I'm looking for buys above this anywhere above the supply level. For the sales could occur below here, but the sales will be a far cry. Let's see which one plays out anyway. Don't forget to subscribe, hit that notification button down here in the shape of a bell, comment and like. Thank you. Baraka Bashad. Peace.